Central Bank Monetary Policy Committee hike interest rate from 17.5 to 18% to curtail inflation. Japan stocks climb almost 2%, leading gains in Asia ahead of Fed's key rate decision. And oil slips after unexpected build in U.S. crude stocks. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. We start with the news that President Muhammadu Buhari has approved the exemption of digital economy sector from 5% excise duty. Minister of Communications and Digital Economy, Professor Isa Pantami, who gave the Cherry News, says this will boost activities in the telecom industry. Chidimma Ndubisi will tell us more.
41 categories of taxes, levies and charges, some by the federal government, others state government. These are the financial obligations telecommunication operators in Nigeria have been living up to. So, 105% excise duty was proposed to be introduced on both prepaid and postpaid telecom services. It was quite challenging for the industry. The Minister of Communications and Digital Economy also rose to defend his turf, and on September 5th, 2022, imposition of the duty was suspended. So, a presidential review committee was set up to study the situation and advise the president accordingly.
I am glad to say and to report to Nigerians that His Excellency President Muhammadu Buhari, the President of the Federal Republic of Nigeria, has approved the exemption of the digital economy sector from the 5% excise duty to be paid.
The cost of data now has come down further to 335 naira. We have an additional 1 undersea cable that has landed. Bring in, data, additional data into the country.
With this, owners of micro and small business enterprises such as Grace, who rely on the ICT sector for survival, will have a breather, knowing that they will not bear the brunt of the proposed tax. Nigerians are to report mobile network operators charging exorbitant prices for data. In Abuja, Chidimma Ndubisi.
The Central Bank of Nigeria, CBN, says Nigerian banks remain strong and resilient, and none is affected by the banking crisis that has led to the collapse of banks in Europe and the America. The Central Bank Governor Godwin Emefiele at the Monetary Policy Committee meeting in Abuja said this, as well as announcing the hike in interest rate to 18%. Musa Abubakar reports.
In the domestic economy,
this is the second consecutive time this year that the Monetary Policy Committee of the CBN had voted to increase interest rate from 17.5% to 18%. Considering its various decisions in increasing monetary policy rate, which had led to deceleration in inflation, the committee observed that headline inflation remained high with increased expectation of price development due to scarcity of petrol and ongoing discourse around removal of fuel subsidy, amongst other factors. This informed the decision to further increase the rate.
While output growth remains on a positive trajectory, Members called for increased monetary and fiscal coordination to support the recovery in the light of risks confronting the domestic economy. To this end, committee enjoined fiscal authority to explore other avenues to improve non-oil revenue to reduce the fiscal deficit and public debt.
The governor assured the public that Nigerian banks have adequate buffers to ward off global contagion caused by bank failures.
The financial stability indicators in Nigeria show that the Nigerian banking system remains resilient due largely to the stringent prudential guidelines put in place by the CBN, which has resulted in a strong buildup of not only the cash reserve ratio deposit in Nigeria, but also liquidity ratio and capital adequacy ratios.
The committee said that more than 900 billion naira is the available money in circulation, while it continues to increase the supply of the newly redesigned naira notes. Cash reserve ratio is retained at 32.5%, liquidity ratio at 30%, and asymmetric corridor at plus 100 and minus 700 basis points around the MPR. In Abuja, I am Musa Abubakar.
Meanwhile, the Central Bank Governor Godwin Emefiele said the bank and other stakeholders are working to address the problem of failed transactions.
Why they are going into the cashless, which is like adopting alternative channels other than cash, that some of the online channels did fail. I must apologize, yes, online channels failed, but no doubt it was a result of the deluge of volumes of online transactions that hit the banking industry. And I think it's currently being resolved, and we are following up on daily basis. Our payment system management department follows up on a consistent and daily basis with the banks to ensure that where there are downtime, they are resolved as quickly as possible so as to make sure transactions are.
And joining me to talk more on the monetary policy decision by the Central Bank of Nigeria is Uche Uwalike. He's a professor of capital markets, Nasarawa State University. Professor, good to have you in the studio, and I'll say a warm welcome to Business Express.
Thanks so much, Benny. It's my pleasure.
Okay, Prof. Some days ago, we had opportunity to talk about the NBS figures, talking about the inflation rates year on year and month on month. And we had also the opportunity to look into expectations from outcomes of the MPC. Now the MPC has come and gone. Were you expecting the committee to hike the interest rates?
Well, Benny, I was expecting the committee to hold the rate, to maintain the status quo, as it were. Well, the fact that the committee ended up increasing the monetary policy rate to 18% by just 50 basis points, which is the lowest we have had since this policy tightening, began. I would say, to me, it is signaling that the future trajectory of policy rates is likely to slow down. So it's signaling the fact that the central bank is recognizing that there's need to pause the rate hikes. And interestingly, this is also what is happening globally. In the US, for example, as you know, as we speak, the Federal Open Market Committee of the Federal Reserve is meeting, and it's also considering a 25 basis point increase. That's the expectation, and that's also lower than what it has done in the past. Ditto for the European Central Bank. So overall, I had expected the Monetary Policy Committee to hold the rates, and I'm happy that even one of the members of the Monetary Policy Committee actually voted to hold the rates. Based on the communique, 12 members attended. One of the members actually voted to hold the rates. And for me, holding the rates would be in the overall interest of the economy, in the sense that it's, an approach or a stance, a monetary policy stance that will help, stimulate economic growth. GDP growth rate last year was, came in at 3.1%, and of course the fourth quarter, came in a little stronger than what we had in the third quarter of 2022. But overall, GDP growth rate, we all know is still weak, and there is this expectation that for the first quarter of 2023, it's likely to drop as a result of the, the cash scarcity, currency scarcity, and the currency redesign exercise that the central bank is currently implementing. So I think that it's important for the CBN to recognize that continuous hike in rates will not be in the overall interest in the economy. Benny, why do I say this? First, it's important we understand and recognize that monetary policy is simply an economic policy that the central bank uses to control the growth and the size of money in an economy. And that's because of the general impression. Of course, it's supported by theory. There's the quantity theory of money by Ivan Fisher that says that the higher the volume of money in the economy, you should expect higher inflation. So the central bank tries to control the volume of money in the economy using monetary policy.
Yes, the central bank is trying to control the volume of money. That's why we had this monetary policy come into play to mop up liquidity. Yes, you expected a stay of action on the interest rates. Yes, we've said increases before, now 100%, up to 150% basis points, but now it's just about 50, a slight increase, though for you voted for stay of action. With what is happening in other financial institutions in Europe, and we had the governor at the MPC meeting talk about a resilient banking system and not being affected by what is happening in Europe, and with the expectations that inflation rates are going to go down, what should we expect going forward?
Yes, well, it's I also said it when we met the last time that I was not expecting the developments in the U.S., particularly the what is happening to to have a significant impact on our financial system, and we've had the numbers. Prudential ratios are looking good. Whether it's the liquidity ratio that's well above the threshold of 30%, in the region of 42%, whether it's the capital adequacy ratio that is within the 10% and 15% range, that at about 13%, or even the non-performing loans ratio that's below the threshold of 5%, 4.2. So in all you could say, yes, we have a resilient financial sector. But the point I'm making is this: if the argument for increasing the rates is because the federal government is planning to remove fuel subsidy, okay? And so I don't see that as a justification to hike rates. And that's because the removal of fuel subsidy is what happens on the supply side. It's not going to lead to an increase in the volume of money. Time will not permit us to, for me to explain this point very clearly. That the point of monetary policy is to control the volume of money in circulation. And the central bank even admitted that as we speak, the currency in circulation, that is what circulates outside the CBN vault, okay, made up of the one in the banks and the one outside, particularly the one outside the banks, that has dropped to about 900 billion to 1 trillion, from 3.3 to about 900 as a result of this currency redesign. So if that has dropped, I wasn't expecting the central bank to further increase rates, because the idea behind increasing rates is to reduce the money in circulation, to reduce the money supply. I know that money supply also has other components. So the point I'm making, Benny, is that once inflation is caused by supply side factors, cost push factors, you don't use monetary policy instruments to fully address that. Okay, so monetary policy is not going to address the issue of high cost of energy. It's not going to address the issue of high transport costs, for example. These are things that you find in the fiscal, realm or fiscal side should be tackling. So, because one of the reasons given for increasing the rate is the expectation that fuel subsidy will go. And I'm saying that is what happens on the supply side. And it is not within the ambit of the central bank to actually control. Now, election seasons are over. Remember too, before now, one of the reasons for increasing the rate is because of the election spending. Now, the election spending is over. That's why I'd expected that the central bank should hold the rate and also begin to now see how it can begin to pursue an accommodative monetary policy, that will help stimulate growth. Because what we need now is stimulation of economic growth. Talking about inflation rate, if you look at what happened between January and February, on a year-on-year basis, yes, inflation rate grew from 21.82 to 21.91. But on a month-to-month basis, it actually fell. Okay, as a result of the, I explained this thing the last time I came. As a result of this currency, scarcity. Yes, there's no doubt that it had to do with that. So, going forward, particularly in their next scheduled meeting in May, I expect the MPC to now completely pause this interest rate hike so that the economy can, have some breather. Right now, if government is removing fuel subsidy, for example, and you're further squeezing out, liquidity, from the system, it will exacerbate the crisis, we have in the economy. What will happen is that you find that companies will produce and they can't sell because of the weak demand. And when companies don't sell, what happens is that you have inventory will build up, okay? Inventory builds up and capacity utilization drops. You have idle plant capacity, and that can lead to unemployment, loss of jobs, okay? And when companies don't sell, they don't make profit. And if they don't make profit, they don't pay taxes to the government. So you now see the multiplier effect of these actions. So I am saying that going forward, the central bank should, think of, pausing these rate hikes and possibly, begin to lower them. Because at 18%, if you look at the average for sub-Saharan Africa, okay, is really high. And remember, we're not just talking about the monetary policy rate, we're also talking about the cash reserve requirement that is at 2.5%, which is about the highest in West Africa. So far. Yes, liquidity ratio of 30%. So these rates are already high, in my view. And I think it is time the MPC, began to see how to soften up, so that, and adopt an expansionary or a loose monetary policy. Inflation rate is not
comparing these rates with other African countries. I've had conversations at the World Economic Forum in Davos, where African central bank governors are strategizing towards the continental market, putting their acts right. Now, we are looking forward to the next decision by the MPC, which will possibly be in May. How will this affect the dynamics of trade in country, and talking about the African continental market vis-a-vis the electronic? I'm doing 2-in-1 now. We're having issues with failed electronic transfers. How would that affect transactions in the economic space?
Yes, I'm happy to beginning with the second question. I'm happy to hear that stakeholders, working on it. The issue of network failure, in particular, because that is not helping the cashless policy of the central bank. The central bank, remember, introduced the currency redesign, partly to boost financial inclusion and the cashless policy. So I'm happy that the CBN governor mentioned that stakeholders are working on it, and that the issue will be over, pretty soon. But on the other question you asked, so it's important that this economy is competitive, within the framework, because if it is not competitive, then it cannot, play the role it is expected to play. And that, being competitive will also require that even the cost of accessing credit is low in Nigeria. Okay, if the cost of accessing credit is high in Nigeria, of course, businesses won't find it convenient to access credit here. And the cost of accessing credit will be high when you have high MPR. What is MPR? MPR is simply the rate at which the central bank lends money to the commercial banks. And if that rate is high, you should also expect that commercial banks will increase their own rates, because that's usually what happens. Look at what happened in the US. I cited it. Part of why we had that SBV crisis was because of the
Prof,
the tightening stance.
You're a renowned professor. All these issues are at your fingertips. For want of time, let's defer the rest of this conversation to another edition. Thank you so very much, Professor Uche Waleke, for sharing your deep knowledge with us at this particular point in time.
My pleasure, Benny.
Thank you. Moving on, the Central Bank of Nigeria says it's working to incorporate financial literacy as part of school curriculum in a bid to equip students with financial knowledge. Musa Abubakar reports that this was emphasized at the Financial Literacy Fair in commemoration of the Global Money Week in Abuja.
Besides acquiring basic knowledge in school, these students have little or no knowledge about money matters. But at this literacy fair, organized by the Central Bank of Nigeria and other banks, Hassan Badamasi and his friends are learning new techniques on how to manage their own finances by the time they start earning income.
Saving my money through the bank's account, opening the bank account and save the money into the bank account.
Still young, so I don't have enough money to save, but with coming here I've learned that having money, you can save money for the future, not always relying on your parents and your guidance. So
there's really a big deal for me to start saving money for the future, because I don't know what will happen in the future.
This is all part of activities by the Consumer Department of the Central Bank to commemorate Global Money Week, aimed at ensuring that all children and young people have access to high-quality financial education. This is to improve their future financial resilience and well-being.
You plan your money through savings, you plan through budgeting, you plan through investment, and the children are equally taught during this period on needs and wants. You have to separate your need from your want, so that you don't put all your money in your want and you won't have savings to invest.
With the theme, Plan Your Money, Plant Your Future, this year's focus is on raising awareness about the importance of adopting a responsible, informed, and forward-looking approach in making financial decisions. In Abuja, I am Musa Abubakar.
And now a quick look at the market. The equities market closed on a positive territory. The all-share index increased to 54,936.11 basis points as equities capitalization advanced to 29.9 trillion naira. A total of 134 million securities valued at 1.3 billion were traded in 2,479 deals. And from a local market, let's take a look at the global stock market update.
European markets rose this Wednesday following UK inflation, which unexpectedly accelerated. After a choppy early trading, the DAX in Germany was up 0.58%. The French CAC gained 0.27%, while UK's FTSE was marginally negative. Asian markets finished broadly higher, with stocks in Japan leading the region. The Nikkei 225 in Japan was up 1.93% at 27,466. The Shanghai Composite topped 0.31%, while Hong Kong's Hang Seng Index gained 1.76%. U.S. stock futures were slightly lower as investors braced for the Federal Reserve's next move in its inflation fighting plan. The Dow Jones Industrial Average lost 0.04%, S&P 500 was down 0.01%, while Nasdaq 100 dipped 0.21%. Markets in Africa also closed mixed in midweek trade, The JSE Africa Top 40 in South Africa advanced 0.98% to lead gains after data released Wednesday showed the country's inflation rose slightly more than expected in February, while Namibia's overall index led losses at 0.42%.
Well, at this point, we end Business Express. Business Express returns tomorrow, Thursday at 9:30 a.m.